Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Wednesday, April the 28th, 2010. The markets were up today. The Dow Jones Industrial Average gained 54 points. We expected that after yesterday's substantial sell-off of 213 points and the fact that the Fed was coming out and we expected them to say, holding the rates at zero, which is all they really can do anyway. We'll get into that stuff later, but for now, yes, this is expected. But even if she moves higher, I do not care. This is a short, plain and simple. I'm going to show you something else today that really kept a lid on the market today was Spain, and the S&P downgraded the debt of Spain, and that's a real game changer. Let me show you that right quick. This chart shows the gross domestic product for any country you type into it. So here we have Greece, which is $356 billion. We know that this equates to 2%, roughly 2%. It's actually 2.16% of the gross domestic product for the European Union. And I want to draw some basic formulas out here for you. So we know this failure here is 2% of the European Union gross domestic product. Not that big a deal, the media tried to say. Well, we're not concerned with Greece, like we said before. We're concerned with that fire spreading, where it's going to go from there. Well, on Tuesday, Portugal came into play. That's another 1.48% of the overall European Union gross domestic product. Now, let's compare this to reality. The European Union lost 4.2% of gross domestic product in the Great Recession. All right? So, now we have some kind of a formula in our head. We know that Great Recession we just went through was hard enough, was mean enough, was tough enough to take 4.2% of the gross domestic product to show a loss of that amount. Okay, that's substantial, and when you start adding these two together, you get a total of 3.64%, negative 3.64% on the overall European Union's gross domestic product. All right, what does all that mean? I mean, they're planning on growing moving forward anyway, so it doesn't really knock them back down to the Great Recession level, right? Absolutely right. But again, we've been talking about Spain, and today the news broke on Spain. So let's toss Spain into the picture here. Let's go find Spain. Where you got? How do you spell Spain? Oh, there you go. Kind of put that in perspective for you, okay? Greece, way down here. Spain, way up here. Rubini says, and I agree with him, the fundamentals of Spain's debt is in a worse condition than Greece. Bottom line, if Greece can fail, Spain will fail. That's my opinion, of course, but it's as solid of an investment truth as I can find. 1.6 trillion, that equates to 9.73% of the, just by itself, Spain by itself is 10% of the overall European Union gross domestic product. If the Great Recession cost them 4.2%, Spain's going to cost them 2.5 times that. All right, that's the kind of numbers you're looking at there, and that's before we add in Greece and Portugal. All right, now we got one more character we got to toss on there. Remember, we had 4 guys we were watching, and Italy has yet to be added to the list, but we believe they will. Excuse me. Italy is even larger than Spain with $2.3 trillion. Okay, Italy equates to 13.98% or 14% of the EU's gross domestic product. When you get done adding Italy, Spain, Greece, and Portugal all together, you're going to come up with 27.35%, roughly one third of the gross domestic product of the European Union has just been gone, just vanished. Okay, that's, take it and compare it again. 4.2% is what the Great Recession cost them. 27.35% is what this is costing them, or could cost them. Okay, that's not something you just, well, we're down 200 points in the Dow Jones, now it's over, and we go up 54 points. I don't think so. You can rally all day long. I don't really care. I'll short you till I run out of money. Plain and simple. This is not over. It's just beginning. Go back and look at the 1929 chart. I'll show you one. 1929 peak, fell to 1930, bounced, and rallied back up here. At this point, they believed the, let me see if I can find something to work for me here. All right, that might, yeah. At this point, this bounce and all this stuff we had going here, everyone who was in power at that time or analyzing stocks at that time in the 1930s believed it was over. The signs that they looked at, the same signs we look at today, all said, "Oh, we're rebounding, we're recovering." Everything looked good, and then something happened in Europe where Germany defaulted on their debt, and it caused this big sell-off down here. That's the wrong tool, but you get the picture. This humongous sell-off we had was actually had nothing to do with the U.S. It couldn't be stopped by the U.S., the Federal Reserve, or anybody else. It was not something you could actually control via the U.S. We're looking at the same exact situation right here, right now. And this is why I keep saying over and over, get short right here, right now, get short. Remember, this is our 1929 chart, but our 2008, 2009 chart, let's look at that. Here's the big sell-off right here, or late 2007, and we started to really sell off in 08. So we had this huge sell-off in 08, the bounce the following year. Note that trend pattern, don't like that. Anyway, you're doing the same exact technical pattern, the same setup on the same fundamentals, the same credit problem that we had before. I have no reason other than I don't see a reason why you can say this is different. I know some people keep saying, well, wait, the Fed behaved different back in the 1929 than they did today. Today, the Fed has lowered rates, slashed it to zero, was not moved it, and you really can't. But he's helping again. What happened to break the U.S. down in 1930 had nothing to do with the U.S. Had to do with what happened in Europe. We're seeing it all again today. That's why Obama said in his press release when asked about Greece, yes, he's very concerned with it. As well, he should be. Okay, this is our analysis for you. It's not really bullish, sorry about that, but we just report the truth, okay? Every sign we look at, go back and watch our analysis on any day you choose. We cover different charts, different time frames, and all the signals are pointing down. And so go to our website, check it out. It's free. You can see what's in my portfolio. You can gain access to our small cap alerts. And also, remember, we are updating our website starting tonight, I believe. That's going to be really cool. Bring us some new features for you. So thank you all for referring your friends, for sharing our videos. We appreciate it. We couldn't do it without you. Here's a look at our disclaimer. The information provided herein is our opinion only. You guys know the picture. Okay? I'll see you all tomorrow. God bless and be careful in this market.